Hi, I'm Ksenia Yasnova, Public Relations Specialist of the company RosCo. When a business went to his final rest, the entrepreneur faces a dilemma: what to choose, liquidation or bankruptcy? What are the differences between these two procedures? Not all entrepreneurs kept their heads above water due to the coronavirus pandemic. In order to answer the age-old question what to do, we'll explain the nuances of liquidation and bankruptcy of the company in our new video.
What is liquidation?
The liquidation of a company always implies the termination of its activities. Liquidation can be voluntary and forced, for example, at the request of the tax authorities. But in any case, the end result of this procedure will be the exclusion of the company from the United States Register of Legal Entities. First of all, the company must pay off its employees, pay debts to counterparties, and pay all taxes. The passage of all stages of liquidation can take up to 6 months. The company itself must publish a notice of its liquidation in the State Registration Bulletin, notify creditors, collect receivable, and pay debts to creditors. If an LLC has debts, for example for the budget and extra budgetary funds, then the tax authorities do not liquidate it. And even if the liquidation is carried out, it can be challenged at the request of the interested parties. Liquidation is often started to reorganize companies, for example during a reorganization through a merger or acquisition of companies. One of the companies is liquidated. If the company decides to let everything take its course, then negative consequences come for the founders and the director of the company. They will not be able to establish another legal entity and hold the position of director for 3 years. In the event that the company has debts and does not make any attempts to repay them, then the company can be liquidated at the request of creditors through an arbitration court.
What is a company bankruptcy?
Bankruptcy is also a way to liquidate a company if it has debts and is unable to pay off its creditors. However, the bankruptcy of a company does not always mean its liquidation. The bankruptcy procedure includes supervision, rehabilitation, external management, bankruptcy proceedings. And at the first 3 stages, it is possible to recover the company and restore the lost solvency. Therefore, bankruptcy does not always mean the end of life of the company. The initiator of the bankruptcy procedure of a company can be both the company itself and its creditors. If the company meets all the signs of bankruptcy prescribed in Article 9 of the Federal Law on Bankruptcy, then failure to file an application with the arbitration court will have negative consequences for the director and shareholders or participants of the company. The most unpleasant thing in this case is bringing to subsidiary liability. That is, individuals, managers, and shareholders or participants will be responsible for the debts of the company. When filling an application with the court, the debtor company indicates an arbitration manager. True, the court is not obliged to take into account the proposed candidate. The result of the bankruptcy procedure will be forced collection of accumulated debts at the expense of the remaining money of the company and the formed bankruptcy estate. In some situations, the head of the company may be held criminally liable if the court proves that his intentional actions brought the company to bankruptcy.
What is the difference between liquidation and bankruptcy?
Now let's compare both procedures, which in the end can lead to the liquidation of the company. Voluntary liquidation is always the exclusion of a company from the United States Register of Legal Entities, while in case of bankruptcy, there is a chance of reanimate the enterprise. Voluntary liquidation is a peaceful process, the participants of which do not participate in court hearings, while bankruptcy means numerous court hearings in arbitration courts. Liquidation and bankruptcy are interconnected with each other. Actually, liquidation can be one of the stages of bankruptcy procedure of a company.
Which way of liquidation to choose?
Each of the methods is applicable in a specific situation. For example, if a company is able to repay debts, then it is more convenient to use the voluntary liquidation procedure and close the company without trial or investigation. The entire package of documents is submitted to the tax office, the company will avoid legal battles, and the process itself takes much less time. The bankruptcy procedure can be launched if the company has large debts that are not secured by current assets, and there is no way to pay them off in the short term. We should not forget about the possibility of shifting outstanding debts to the company's leaders. In addition, if the head of the debtor company does not transfer the necessary documentation to the bankruptcy trustee or interferes with this procedure, then receivables may be recorded from him in the amount of undeliverable documents. I'm glad you watched the video till the end. I'm Ksenia Yasnova. If you have any questions, feel free to drop a comment and RosCo specialists will kindly answer them. And of course, subscribe to our channel where you'll find loads of useful information, not only for your business, but also for yourself. Stay in touch, stay with RosCo.